4, 3, 2, 1, 0.
This is a story about attracting bees with honey. Specifically, the honey of rich capital markets attracting the bees of tech entrepreneurs. Something that has helped drive U.S. economic growth, but that has largely been lacking in Europe, except in one particular corner.
About 39% of household assets in the United States are invested in equities, which is the highest in the world. But here in Sweden, it's 36%.
And it's not just how much, it's how broad.
About 90% of the Swedes' savings are in some financial asset, which makes us the most investing country, at least in Europe.
We're blessed to have a broad equity participation, so lots of people who own stocks directly. What that does is, of course, it creates this economic alignment, etc.
We've come to expect robust capital markets supported by retail investment in the United States, but not necessarily in Sweden, a Nordic country with a population of just a little more than 10 million people that punches above its weight in the depth of its capital markets and is home to NASDAQ's European headquarters.
We operate our markets here and also in the Nordics. We own and operate almost all the markets in the Nordics.
We spoke to NASDAQ CEO Adena Friedman in New York in April, not long after President Trump had roiled the markets with his sweeping tariff announcements.
So on options, in 2024, we had an average of about 24 million contracts traded a day. On Friday, we had 94 million contracts traded. Now, what generates that, though, what's really, really interesting is options markets are extremely data heavy.
Friedman and her NASDAQ team have plenty to handle with U.S. markets, but they also run European operations almost as large in what they call NASDAQ Nordic, which became part of the group in 2008. We accompanied Friedman on a trip to their European headquarters in Stockholm.
Well, Stockholm is one of the great markets that we own and operate here in the Nordics, but it also is the headquarters to our market technology business, where we serve 130 markets with our technology that helps them power all the markets, those markets around the world as well.
How much of NASDAQ's overall operation is represented in Stockholm?
Well, we have about 800 employees here in Stockholm, slightly smaller than New York, where we have about 1,000 employees in our New York office. So it kind of gives you a sense that this really is our second headquarters in the world. It's one of the special places that I get the benefit of being able to come to as we engage with the markets here in Sweden. One of the things that I find interesting is how similar it is here in Sweden versus New York. So the markets in Sweden have a lot of characteristics to the markets in the U.S., which is different than the rest of Europe. So when we look at it, we look at, well, how liquid are the markets? How many new companies come and list here in any given year? How active are the markets in terms of having retail ownership of equities? And in many, many cases, those are very similar to the U.S. So we have 1,200 companies that are listed in the Nordics. And in any given year, we'll have dozens of companies list here, both small companies on our SME market, which is called First North, and on the main market. So we're really, really proud of the fact that the markets here are very vibrant and have a lot of similarities to what we see in the U.S., but sitting here in Europe.
One sign of its strong capital markets is Sweden's IPO pace. Between 2013 and 2024, there were more IPOs in Sweden than in Italy, France, or Germany, second in Europe only to the UK.
The U.S. markets are the largest, deepest, most liquid markets in the world. But when you look at that, how that's translated into the markets here in the Nordics, it actually has a lot of the commonalities. The market cap of the listed companies here in the Nordics are about 2 trillion versus, of course, we have about 30 trillion in the United States just on NASDAQ. However, the liquidity that underpins that market cap here in the Nordics is quite vibrant, very active.
We have lots of IPOs in Sweden. We have more IPOs than many European countries together. And I would say that is one important source.
Sweden's vibrant IPO market is no accident. It results in part from government policies that encourage household participation in the markets, starting with taxes. Niklas Wykman is Sweden's Minister for Financial Markets.
First of all, for the smallest entrepreneurs and new entrepreneurs, closely held corporations, as they are called, they have strong tax incentives because there's a 20% tax on dividends within a rate of return allowed. It's quite complicated, but it's also quite strong incentives to do business. And then we have the ISK system that takes down the cost of capital, so to say, or it provides at least more capital into the system because you have a low effective taxation on your invested savings. So I would say those are two important aspects, one for the entrepreneurs and one for the providers of capital. We have strong incentives to stay in business for a long period of time. We don't have any inheritance tax, we don't have gift tax, we don't have tax on accumulated wealth, or wealth tax, as you normally say. So I would say there's strong incentives to provide capital in the system. There are strong incentives to do something good with it, and it's strong incentives for active owners to remain active and perhaps to involve their families and keep their businesses over generations.
Another big driver of retail participation is an investment account known as an ISK, a government program under which 2.5% of every employee's wages are put into an account in their name, which they can allocate among a range of funds. These funds are not subject to capital gains tax. Instead, they are taxed 1% each year on the value in the account.
One of the great examples of where regulation has played a really key role in driving liquidity in the markets has been that ISK program, where they started in 2012 and they said every citizen should be investing in the markets. So therefore they said, okay, well, we'll create a tax account where you're only taxed about 1% of your total assets every year. No cap gains tax. So it means that investors can really bring their money into the markets. Their only obligation is to invest in the public markets anywhere. And it allows investors to have a great engagement with the economy.
Christian Cederholm is the CEO of Investor AB, a company which serves as the investment arm of the Wallenberg family, one of the most prominent families in the country. In the 1970s, Wallenberg family businesses employed 40% of Sweden's industrial workforce and accounted for 40% of the total worth of the Stockholm stock market.
This has created this sort of positive flywheel effect where owning stocks in a company, you may even work for that same company, by the way, and we're blessed to have a great number of, even just going in looking in Sweden, great number of high quality companies. So you may work for them, you may be invested in them, and of course that creates this engagement around business as part of a society.
You mentioned the breadth of ownership of equities in Sweden. As I understand it, there are 10 million people roughly in Sweden. You have 650,000 shareholders yourself at Investor AB. How do you explain that breadth? How does that happen?
Well, I mean, first of all, we're really thankful for the trust that people put in our work. And you know that they appreciate what we're doing, so we're quite humble to that. The way I look at investor, what you get is you get engaged ownership and active investment in a portfolio of about 25 really good companies, so high quality companies, and at a relatively slim cost as well. And then, of course, over time, it helps that we have created a strong total shareholder return over most sort of longer time periods, at least. So something seems to be working with the model.
And I think it serves two purposes. First of all, it's about social coherence. You have your job, you have your salary, but you also have a share of the most productive part of the economy that belongs to you because of your savings. And it's about, then, of course, economic efficiency. It provides capital for inventors and entrepreneurs. So it's, I would say, both about social coherence and economic efficiency in a very nice combination. Our social security system is important. It makes it possible to take risk, both with your savings, of course, but also in your work life as a whole. When you have some basic, trustworthy welfare system, you know that you can have a bit more risk, of course, in the rest of the economy. So I think that is one important topic. But of course, also the culture doesn't come from one source. The welfare system could be one such source. The education system could be another. And also, of course, that we provide financial stability, that we safeguard our financial system.
What does all this mean for Sweden's economy as a whole? Its GDP is projected to grow 2.3% in 2025, compared to just 1.7% for the United States. Perhaps as important, is Sweden's level of productivity, which drives future growth.
Recent years we have had the same problem as most of the Western world, or especially the Europe as large. We have a productivity problem, but if you extend the time period a bit, you can see that Sweden is exceptionally productive.
Sweden's approach to encouraging broad and deep capital markets comes in sharp contrast to some of the rest of Europe. In his report on European competitiveness, former ECB President Mario Draghi pointed to the lack of sufficient capital support as one reason why Europe has lagged behind the United States in the growth of tech giants. Henry McVey is the head of the global macro and asset allocation team at KKR, and we spoke to him after he returned from a trip to Europe.
When you look at it as a percentage of GDP, it's about a third of the U.S. And so there's clearly been a differential over the last 10 and 20 years. That's on the equity side. On the credit side, what I think Europe has missed is it's really been so bank controlled that you've missed the real growth in the securitization market. So if you think about the U.S., we securitize everything. It goes into the capital markets.
The Draghi report talked about that. Will that shift capital markets, do you think, in Europe?
Well, it's certainly been a big wake-up call, first of all. And if I take my positive hat on, what I say is that hopefully now what you can read in the Draghi report, etc., is turned into real and concrete actions as well, so that Europe can leverage all the advantages it has. I mean, it's a large market, stable institutions, whatnot, so and high equity participation in some parts of Europe as well. And then whether it shifts, I mean, it seems to, just looking at where valuations have gone recently, some of the shift you describe seem to be in the making. Where that goes long term, probably others are better positioned to tell, right?
The Draghi report on the future of European competitiveness called for Europe to develop a deeper pool of angel investors and increase European IPOs to fund high-growth companies. So has Sweden's commitment to these sources of capital resulted in a more robust startup culture? Sweden has produced more tech unicorns per capita than any other country in Europe after Estonia. And according to the World Intellectual Property Organization, Sweden ranks second in global innovation among 51 high-income countries, second to Switzerland, and just ahead of the United States.
Sweden has some well-known brands going to like IKEA, H&M, Henriksson, or more recently Spotify and Klarna. So it's a strong culture of entrepreneurship, which has fostered, in a way, innovation, of course, but also investments in the community at large, and sort of from a capital market perspective. So in Stockholm in particular, I think it's a small city, but investors are never far away.
Olle Lundin is the CEO and one of the co-founders of Froda, a tech startup that provides small and medium-sized enterprises with access to financing.
We started the company back in 2015. We came across the idea when we were sitting at Stockholm School of Economics, have an incubator called Stockholm School of Economics Business Lab. And we realized at the point in time that all these entrepreneurs who were sitting at that incubator starting their businesses were struggling to get access to external financing. And we realized that this is a huge problem and it's really hampering innovation and growth and competitiveness all across Europe.
Even Sweden's retail banks work to bring their customers into the world of investing.
One of our things to do is to help people to educate them in financial literacy. So that means that in the old days, the savings banks gave like a few kronor to when you were newborn and you could save it. And what we do is we talk with youngsters, we educate them on financial literacy, we give them easy ways to invest in equities, to put their money into pensions and things like that. So we help people through that journey to make sure that in the end they have good financial health.
Jens Henriksson is the CEO of Swedbank, one of the largest Nordic banks, with around 75% of its revenue coming from Sweden.
We're a nation of engineers, and we're a small and open economy. And sometimes people ask, are you not afraid that the new technology will sort of make you lose your job? And people say, no, we're afraid of the old technology because the old technology might hurt, might sort of make us weaker. We need new technology, develop going forward, increase growth and make Sweden welfare and a better society to live in.
Sweden's support for innovation goes back decades.
I remember back in the early or mid-90s, there was sort of an initiative called Bring a Computer into Every Home, which was launched by the government and essentially meant that each and every household in Sweden could get a computer for almost no money at all. I think what we don't have to the same extent as, for instance, the US, you have the pockets of Silicon Valley, those huge funds that can invest billions and billions of dollars. We don't have that. So I think what that means is Swedish tech companies or startups need to show profits earlier in their journey compared to their US counterparts. Also, it's kind of a small market, so you need to demonstrate scalability. You need to be able to show that this is an idea that's not only sustainable in this tiny sort of Nordic market, but this is an idea that you can actually export across the globe. So there's a requirement that you need to be able to show how this works across the globe, or at least in a lot larger market, not only Sweden.
Sweden's innovation ecosystem is supported by more than its tech or tax and savings policies. Today, the country's social welfare policies also have expanded to support the risk-taking needed to foster entrepreneurship.
It is a very vibrant innovation ecosystem. I think that the government has done a lot of work intentionally to make sure that they allow companies to take risk, allow companies to grow and expand, become global players. And then they have a great system that also encourages citizens to invest in these innovators.
Our social security system is important. It makes it possible to take risk, both with your savings, of course, but also in your work life as a whole. When you have some basic trustworthy welfare system, you know that you can have a bit more risk, of course, in the rest of the economy. So I think that is one important topic. But of course also the culture doesn't come from one source. The welfare system could be one such source. The education system could be another. And also, of course, that we provide financial stability, that we safeguard our financial system, make it in the long term high-functioning, well-functioning.
We don't do a lot of, call it early venture capital, startup investment ourselves. But if I look at innovation more broadly, then I think one part of that is maybe our small home market, right? Meaning that we've always been forced to go out there and compete with the best in a way. So that's one big driver. Then I also think that we have some more societal infrastructure that works for us. Just to mention a few, I mean, one is free and generally high quality education for all, which is broadly available. We also have pretty generous welfare systems, including childcare, which has helped, of course, to create labor market participation.
Access to capital through private markets is an important part of the innovation puzzle.
Europe actually has about the same number of venture capital companies per year that gets hatched, which is interesting relative to the U.S. What Europe has been missing is those global dominant firms, $100 billion and more. Typically, those companies are actually getting bought by U.S. firms. So there is the beginning of the food chain on innovation, right? Entrepreneur is actually a French term. But what's happening is you haven't made it to create a global dominant giant. You have ASML, but you don't have the type of companies that you have with Google and Meta and Microsoft. And so that, to me, is the opportunity set, is to really see that value chain all the way through. You haven't had the same opportunity set. In the US, it's maybe 25% of the index, and in Europe, it's 7%. So there is entrepreneurs and there's growth, but a lot in the public markets, a lot of that's been concentrated in the US markets.
Investor AB is one of the most important sources of private capital for Swedish companies, but its take on private equity looks different from the United States.
Basically, when we make an investment, we do it not having exit as part of the strategy. And that means that we're really picky about getting companies who are in industries or end markets or niches where you have some kind of structural growth tailwind. We don't love to sort of fight gravity, so we prefer the tailwind. And then companies with a long-term right to win in those markets. And typically, and it goes back to the point about innovation, if we look at our companies across, call it 25 or so companies, most of them have leading market positions, and they have that thanks to leading or sort of best-in-class products and this obsession about the products and the customers. So that's I think, we really pick on that, the long-term attractiveness of both the company but also the industry that they're in, because we're wary that it's better basically with some tailwind and some headwind. To be clear, we have shareholders in all parts of the world. We have Nordic roots, but we see ourselves as global investors. And if you look at our companies, they typically have the Nordic roots and the Nordic heritage, but coming back to our small home market, etc., they're typically active across the globe. If I look at Investor AB and the company as such, we have operations here in Stockholm and in New York. So those are our two sort of home markets, and that's where we go look for new platform investments or new logos, if you want.
Sweden's model has worked to jumpstart its innovation and growth, but replicating it in other parts of the EU is not as easy as it sounds.
There is a huge interest from other European countries and from the European Union about the Swedish case. How did we succeed to have our households to have this large retail participation in the financial markets? How did we succeed in reforming our pension system? How did we succeed in getting those tax incentivized saving products in place that provides the households with a better return than they would have in just a system where you pay taxes and get benefits from the government, and then of course also provides corporations with more capital than in other countries. So there is a huge interest in the Swedish example, and since we're humble people, of course, we always say that it's a matter of several factors. It's not one thing you could do here.
If Europe manages to adopt the Swedish model of supporting capitalism with social welfare, the growth upside of the EU is high, but Sweden is setting its sights even higher.
We say that the United States need to watch out if we manage for the whole of Europe to do this, because then we will be a much more efficient competitor.
And that means that you have free education, you have free universities, you have daycare, childcare, you have, and you can continue with all these things. And then people can take a bit more financial risk. And you're right, it is risky in that sense. But we know that risk usually pays off in the long run. Well, at least history has shown us that.